Yeah, the market's been cooling off a bit lately, right? Not everything's getting pumped 10% every single day to the moon anymore, but honestly, that's probably healthy. Corrections are normal, but that actually makes today's topic even more interesting, and we haven't covered BigBear.ai in quite a while, so it's about time we dive back in, because what's happening with BBAI right now is genuinely fascinating. They've been absolutely on fire with partnership announcements lately, and with Q3 earnings coming up on November 10th, the timing couldn't be better to dive into what they've been building. Quick heads up before we dive in, this isn't financial advice, just our analysis and opinion based on publicly available information. Always do your own research and talk to a professional if you're making investment decisions. So let me catch you up on what's been driving the momentum, because Big Bear has dropped 3 major partnership announcements in the span of just a few weeks. On October 13th, they announced a partnership with Tsecond to deliver AI-enabled edge infrastructure for the battlefield. This is huge because we're talking about deploying AI in the most demanding environments, actual combat zones where speed, security, and reliability are life or death matters. They're combining Big Bear's Conductor OS orchestration platform with Tsecond's Brike platform to enable U.S. national security organizations to deploy AI at the tactical edge. Battlefield AI is exactly the kind of high-value, mission-critical application that leads to substantial long-term government contracts. The statement from the announcement really drives this home. Edge AI must be fast, secure, and reliable. This partnership combines BigBear.ai's orchestration capabilities with Tsecond's edge infrastructure to enable AI deployment in the most demanding environments. That's not marketing fluff, that's describing real operational capability that the military desperately needs. Then just before that, in late September, they partnered with SMX for UNITAS 2025, which is one of the longest-running multinational maritime exercises in the world, involving the U.S. Navy 4th Fleet, with about 8,000 personnel from 26 allied nations. They're providing advanced AI and orchestration tech to enhance maritime domain awareness. And they also deployed their VeriScan biometric technology at Nashville International Airport to speed up passenger processing through customs. So you've got this trifecta of defense, maritime, and critical infrastructure deployments all happening within a few weeks. What's really compelling about these partnerships is the diversification they represent. Big Bear isn't just a one-trick pony focused on a single defense application. They're proving their AI orchestration technology works across multiple high-stakes environments. Battlefield edge computing, multinational naval operations, and airport security are all completely different use cases. But Big Bear's platform is flexible enough to handle all of them. That speaks to the robustness of their technology. And these aren't pilot projects with startups. We're talking about partnerships with established players supporting major U.S. military operations and critical infrastructure. The validation here is real. The market's clearly recognizing this, which is why you saw that massive 68% run over the past month. Now, the pullback we're seeing, down from $8.91 to $7.70 over the last couple days, is actually pretty normal after a move that big. When a stock runs 68% in a month, some profit-taking and consolidation is healthy. What's interesting is that this pullback is happening right before Q3 earnings on November 10th. Here's why the earnings matter so much. We're going to get the first look at whether these recent partnerships are starting to translate into revenue, what the guidance looks like for Q4 and into 2026, and whether there are additional contract wins to announce. The company's got $391 million in cash on the balance sheet, and they're generating positive free cash flow of $166 million trailing 12 months, so they've got the resources to execute on these opportunities. The defense AI market is absolutely booming right now, with increased government spending on modernization and AI-enabled warfare capabilities, and Big Bear's positioned right in the sweet spot. The comparison to other AI defense stocks is worth noting too. Palantir's obviously the big player in this space with a market cap over $420 billion, but they've also run up massively and trade at premium valuations. Big Bear, at $2.8 billion, is a fraction of that size, which means there's more room to run if they can prove execution. And unlike some AI companies that are purely software, Big Bear's building this full-stack AI orchestration platform that handles everything from edge deployment to data management to analytics. That's a differentiated approach that could give them an edge in winning contracts that require end-to-end solutions rather than point products. The diversification into critical infrastructure like airports also opens up entirely new revenue streams beyond just defense, which reduces concentration risk. The upcoming Q3 earnings on November 10th are absolutely critical. Analysts are expecting revenue around $35.55 million and -6 cents EPS. What's interesting is that analyst estimates haven't been revised upward despite the recent partnership announcements, which suggests the market is still waiting to see concrete revenue impact from these deals. If Big Bear comes out and shows improving revenue trends, provides strong guidance for the rest of 2025 and into 2026, and announces new contract wins or gives more details on the value of these partnerships, that could be a significant catalyst. The company's got the cash position to support growth, they're generating positive free cash flow, and they're winning partnerships with legitimate players in defense and infrastructure. Look, there's always execution risk with any company, and Big Bear needs to show that these partnerships translate to meaningful revenue growth. The stock's also pretty volatile with a beta over 3, so it moves fast in both directions. But when you step back and look at the bigger picture, defense AI is a massive growth market. The U.S. government is prioritizing this technology. Big Bear's winning partnerships across multiple verticals. They've got strong cash and FCF, and earnings are coming up in 3 weeks. There's definitely a lot to watch here. The next 3 weeks are going to be really interesting to watch as we head toward November 10th. This isn't financial advice, obviously, and everything here is based on our analysis and publicly available information. You've got to do your own research and understand what you're dealing with. But if you believe in the defense AI thesis and you think management can execute on these partnerships, the current setup after this pullback could be worth watching closely. Those Q3 numbers on November 10th are going to tell us a lot about where this thing's headed. What stock should we analyze next? Drop your suggestions in the comments and we'll dive into another one. The more specific you are about why you're interested, the better. Whether it's a crazy news story you saw, a sector you're curious about, or just a ticker that's been moving and you want to understand why. Otherwise, thanks for watching, and we'll see and hear each other in the next video again. Take care of yourself.